Welcome to this strategy video where I'll show you how to use the powerful combination of Heikin Ashi and EMA indicators to achieve a 100% win rate. By the end of this video, you'll have a clear understanding of how to use the Heikin Ashi and EMA indicator to identify high probability trades and maximize your profits. You'll also learn how to manage your risk and avoid common trading mistakes that can lead to losses. So, if you're ready to take your trading to the next level, hit the like and subscribe button. Before we begin the video, it is good to know that you can automatically follow the trading strategy from this video through my Telegram channel. You will be automatically notified when you can open a buy or sell position based on this strategy. Now let's get started quickly. Strategy settings. Before adding our indicators, let's switch from standard candles to Heikin Ashi. For my backtesting, I will be using the BTS USDT in a 30-minute time frame. To add our indicator, go to the Indicator tab, write EMA, and click on Moving Average Exponential. Let's make some changes. Open Settings by clicking on this indicator and in the Input tab change length from 9 to 18 and color it yellow. As we can see, the strategy is straightforward and does not clutter the chart with multiple indicators. Now, let us proceed to review the trading rules. Rules for a buy position. Let's take a look at how our strategy works in the example of entering a buy position. First, the 9 EMA must cross the 18 EMA. Secondly, at least one bullish Heikin Ashi candlestick must appear, and it must close above the EMA after crossing. Once these conditions are met, you should wait for a bearish Heikin Ashi candlestick to touch either of the two EMAs. It is important for our strategy that the candlestick does not close below the 18th EMA. After this pullback, we will wait for the first bullish Heikin Ashi candle to confirm our buy position. And for this strategy, I use such entry conditions: a stop loss at the lowest point of the most recent bearish candlestick, and our target will be twice the amount of risk. Quite often, there are cases when it is better not to open a buy position. For example, when we observe a crossover where the 9th EMA closed above the 18th EMA and we also have at least one bullish Heikin Ashi candle that does not touch the EMA and a subsequent pullback. But the most important difference is that the Heikin Ashi candles closed below the 18th EMA, which invalidates this signal. It is important to note that we should not wait for the next pullback until a new EMA crossover occurs. I can understand that you don't have all day to analyze prices before opening good positions. That's why I designed a trading bot that automatically gives an alert 24 hours a day when you can open a buy or sell position based on this strategy. Through these alerts you will save a huge amount of time and only trade at the right times and start earning the maximum. Press the link below this video for more information. Rules for a selling position. To enter a sell position, the conditions are the same but from the opposite side. First, we wait for the EMA to cross, specifically where the 9th EMA crosses below the 18th EMA. After that, we should observe at least one Heikin Ashi candle with a bearish trend that closes completely below the EMA after the crossover. Once this condition is met, we expect a pullback. For a pullback to occur, a bullish Heikin Ashi candlestick needs to touch one of the two EMAs. As with buy trades, the price action necessarily has to close below the 18th EMA. When the first bearish Heikin Ashi candlestick appears, it will be a confirmation for entry. Same with the entry conditions are the same as in the buy, only from the opposite, so our stop loss is at the high of the previous bullish candle and our price target is twice the risk. However, as with the previous entry conditions, we will not take into account any pullbacks that occur after the first setup, which makes the following sell position conditions invalid until the EMA crosses again. Extra buy and sell examples. To gain a full comprehension of this trading strategy, let's take a look at a few more additional examples. Firstly, let us consider a bullish setup where the 9 EMA crosses above the 18 EMA, and we wait for a bearish candlestick to touch one of these two lines. Upon observing a pullback, we can safely enter a buy position, and this trade proved to be successful. Next, we have a valid sell setup where we witness a cross and at least one bearish Heikin Ashi candlestick not touching the EMAs. A pullback occurred, and the price action did not close above the 18 EMA, making this a favorable setup. Unfortunately, this trade did not result in success. Finally, we have a new EMA cross and a new sell setup. After verifying all conditions were met, the trade was successful. Backtesting. Now that you understand the principle of trading with this strategy, let's backtest and analyze the result to gain even more confidence in the profitability of this strategy. After completing the initial backtesting, I was pleasantly surprised by the results. I reviewed only 10 examples where the entry conditions were optimal and 8 of them were profitable. Obviously, after analyzing more information, this analytics can be more accurate, but even this data is enough to conclude that the strategy is successful. Extra indicator. To enhance the win rate, I will be making adjustments in the second part of this video. To achieve this, we will be introducing an additional indicator to the chart, which is referred to as the volume oscillator. In the indicator's settings, we will be increasing the visibility of the line, and let's change the time frame from 30 to 5 minutes. Once these alterations have been made, we will have a complete strategy, and our next step will be to familiarize ourselves with the trading rules. Rules with extra volume oscillator indicator. In general, the main difference from the previous conditions is only in the new indicator, and its value should be higher than 0. This will help us reduce the number of unsuccessful trades. When the entry condition is met, which means we can confidently open a buy position, the conditions for entering the position will be the same so that we won't go into this again. It is important to note that we will refrain from initiating any additional buy trades after the first pullback, and instead will patiently wait for a fresh EMA crossover. Opening a sell position is no different, just make sure that the conditions are met on the opposite side. But only the volume oscillator must be in the same condition and be higher than the 0 line. And the reason why we added this indicator is to help us avoid opening positions by mistake. Let's look at an example of such a case. Now you see exactly the case when the first two conditions are met, but our last indicator is below the 0 line, which would have saved us from opening an unsuccessful position. Summary. So, to summarize, we can conclude that this strategy has a high victory rate and it is very relevant. So don't waste your time, this strategy can increase your capital right now. I hope you enjoyed the video. If you did, please leave a like and subscribe to the channel. You won't miss out on my future videos about other trading strategies. Thanks for your attention.